With all the instability in the global economic and political markets, I wanted to talk about what might be coming and what you can expect out of the Australian housing market in 2025. I recently purchased an incredible article called the Boom and Bust Report from SQM Research. Now, in that report, they look at 4 central scenarios for the Australian property market in 2025 based on a whole bunch of different key performance indicators. Now, their most likely scenario at the moment, based on what's happened since the start of the year till now, was based on the Reserve Bank of Australia dropping interest rates in the March quarter, as well as the Australian population growing by around about 500,000 people in 2025. Now, while there is so much doom and gloom and noise in the market at the moment, based on this scenario by SQM Research, they're actually expecting the Australian housing market to finish the year extremely strongly with about a 6 to 10% gain Australia-wide. Now, I know that's going to completely piss off and upset a lot of people out there at the moment because there is so much doom and gloom and negativity in the market. Now, this is based on a whole bunch of different factors globally, including the instability of the financial markets at the moment. I know the stock market has recently taken an absolute hit based on these changes to the American tariffs. On top of this, we've had a whole bunch of different headwinds since COVID, including extremely high interest rates, massive changes in the way we live, and massive changes, most importantly, in the way that we think online. Now, when we look further into SQM's report, there are some absolute winners in the Australian housing market and some losers in the next 12 months. Some of the winners include Perth, which is actually expected to do between 15 and 20%. Brisbane's also expected to do between 11 and 16%. Darwin's another market that's been undervalued for a long time right now, with very, very low average annual growth rates in the last 10 years, and that market's expected to do between 6 and 10%. In terms of the Melbourne and the Sydney markets, Melbourne's expected to do between 2 to 6% in 2025, where Sydney's expected to do between 3 and 7%. Now, what's interesting, particularly about the Melbourne market, which I also believe is statistically undervalued at the moment, is it's getting hotter and hotter and hotter on a weekly basis, and I think the predictions that SQM is expecting and the result of this market by the end of the year might actually be a lot better than the projections. Adelaide's also another one of the markets that's expected to do extremely well based on the population growing and those rate cuts continuing to come through, with an expectation of that market going up between 10 and 14% in 2025. Now, if we take a look at what the big 4 banks, and in particular CBA, are saying about 2025, they're now expecting a further 3 rate cuts between now and Christmas. If these come through, it's going to put an absolute match under the Australian property market, and it is going to explode in the short term. Not only will it make it more affordable, but will also massively increase the average borrowing capacity of people like myself and yourselves out there that are looking to buy high quality property in the next 12 months. Now, CBA is basically saying that the Australian government, or the RBA of Australia, has effectively got inflation within a regular range, which is why rates can come down later this year. And if the predictions are true, they'll continue to come down till the middle or end of 2026 as well. Now, on top of this, unemployment rates across the country are extremely low, consistently sitting within that 4% range at the moment, which is well below that longer term average of over 6%. Now, the science behind why rate cuts in Australia are so important to short-term housing price growth also came from another article out of CBA, where they did a study looking at the long-term trend between rate cuts and house prices over the last 30 years. Now, what they found is that for every 1% drop in rates over the longer term that is held for about the next 12 to 18 months, we generally see about a 15% jump in house prices Australia-wide. That means if the average retail rate in 2024 was somewhere between 6 and 7%, and by 2026 we start to see retail rates for interest rates between that 4.5% and 5.5% mark. Based on this history, we should see phenomenal outcomes short term. Now, on top of this, the Australian government is about to bring in a massive range of first home buyers grants. On top of the stamp duty concessions, which are phenomenal for the big states in Australia, we're going to see the threshold points jump significantly. Now, at the moment, one of the things stopping many first home buyers coming into the Australian market is just the grants don't correspond to the house prices in each of the cities around Australia at the moment. But with these changes that may be implemented in the new financial year, we'll see the first home buyers grants go up to about $1.5 million in Sydney and $1 million in the cities like Brisbane around the country, which will put a fire in that $700,000 to $1 million range in the secondary cities like Brisbane, Perth and Adelaide. And in those capital cities like the likes of Sydney and Melbourne, it'll put a flame in the $800K to $1.5 million price range, which will again knock on effect up the line as people jump out of their first properties into their second or third homes. Now, if we look at the ABS's website, they're forecasting around about 500,000 people coming into the country for the next 5 years. Now, if we look at the perfect storm for property prices in Australia and globally longer term, it's generally in markets with strong population growth, low interest rates and stable economies. And then if you overlay those things with extremely strong infrastructure growth and confidence in the market, we're creating conditions that are extremely conducive for strong price growth in the property market. So one of the questions I've been asked is, if all of these analysts and the major banks are so bullish on the market right now, then why are people feeling so bad? Which is why I wanted to introduce you to 3 books so that I can explain or briefly explain the 18.6 year real estate cycle and where we are right now. Now, the first and I think the most important property investment book ever written is called The Secret Life of Real Estate and Banking by Phil Anderson. Recently, Phil's business partner Akhil Patel actually put out The Secret Wealth Advantage, which is a phenomenal read as well. And a lot of this stuff was based on the research and the original book called The Power and the Land by Fred Harrison. Now, these 3 books will forever change your life as an investor, because what they do is they stop leaving the real estate cycle or the global economy up to chance, and they look at hundreds of years worth of history to explain what is going on with the movement of money and the way that people feel about the markets over a 20-year period. So basically the 18.6 year cycle, which is explained extremely well in these 3 books, has a period where property prices go up after the last GFC, then they come down in the middle point called the mid-cycle slowdown, they go up again, and then we have a GFC style event. Now, it's extremely important to you as an investor to know where we sit at those different stages of the cycle as you invest your money, to not just protect yourself, but to massively increase your returns at the right time as well. Effectively, these books provide a guide of when to be all in the property markets or the stock markets or in business, and when to be more conservative and sitting on the sidelines waiting for opportunity. Now, according to Phil Anderson and Akhil Patel, we are now in the winner's curse phase of the cycle, which is effectively where we should start to see certain markets around the world go absolutely crazy, leading us into the next GFC style market. Now, what these GFCs or Great Depression style markets are generally characterized by is about a 30 to 35% drop in house prices in America, as well as a 35 to 60% drop in the Australian and American stock markets. Now, when I sat down recently with Phil Anderson, who is a colleague and a friend of mine, we talked about the American market, but then reduced it down to the Australian market and each of Australia's capital cities. And what we found out is that through the last 3 cycles or the last 60-year period, in that downside or that GFC style event, we would normally see house prices in Sydney and Melbourne go down about 8%, and prices in Brisbane and Perth generally go down by about 12%. So when I found that out, I was very, very scared after reading this book, because obviously the history of American market has been so much more intense, but I slept a lot better and felt a lot better sort of seeing that the Australian markets, at least in the 3 last cycles we've gone through, haven't been hit that hard. Now, what's important to understand is from the GFC endpoint to the next GFC, we generally see Australian property prices go up somewhere between about 120 and about 150%, depending on which capital city we're referring to, and stocks from the bottom to the top go up almost 200+%. Now, for those of you interested in learning more about this, I strongly recommend The Secret Wealth Advantage by Akhil. It is a phenomenal read. It will put you in fantastic stead and help you get ready for not just the current marketplace that we're in at the moment, but also the once in an 18 to 20 year buying opportunity that we should see in Australia over the next 2 to 3 years. Now, while 2025 and 2026 will be bumpy and uncomfortable years as investors based on history, and that's because people are feeling good and they're feeling bad, and this stage of the cycle or the winner's curse is generally a highly volatile area. According to CBA, SQM, CoreLogic, and all of the other major banks in Australia, 2025 is going to be a phenomenal year. And for me personally as an investor, who's looked at over 4,222 suburbs across Australia, across over 60,000 data points in the last week. The two markets that I love at the moment that I've done other videos on to educate you guys on at the moment are Melbourne and Brisbane. Now, obviously it's all well and good for people like myself out there or the other buyers agents or analysts to have their ideas on the market. But if you're sitting down with me now and we're having a juice or a beer and you said, Ben, what are you planning to do in 2025? I'm planning to buy 2 properties in Melbourne as close to the city as I can afford in the next 3 or 4 months. I see the opportunity down there to be a once in a 10-year opportunity, and I'm super excited about that market personally right now. G'day guys, my name's Ben and I'm the director here at Pumped on Property, and I just want to say a massive thank you for watching our content today. Now, if you're thinking about buying an investment property in the next 3 to 12 months, then the team and I would love to offer you a one-on-one strategy session. In that session, we can talk about exactly where you are right now, where you'd like to be longer term, and we can deeply educate you on the Australian market. And then you can take that information and go and absolutely smash it on your own, or potentially become one of the small number of clients that we work with each week. To book your session, all you have to do is go to www.pumpedonproperty.com and click that book your free strategy session button. But either way, we wish you all the best on your journey as an investor to financial freedom.